cost of project and all its related and relevant items. Cost of project, capitalization to fixed assets, and related depreciation workings as per profitability and IT, intangible assets write-off. There are 6 screens related to cost of project. First, main basic screen of cost of project. Second, funding status of cost of project. Third, already incurred to be incurred status of cost of project. Fourth, phased cost of project over next 5 years. Fifth, detailed working of PNP expenses including interest during construction period. Sixth, detailed working of provision for contingencies. We shall initially get into this first main screen of cost of project. First column is referring to description and nomenclature. All nomenclature as that of cost of project are user defined. Usually you need 6 to 8 such categories for fixed assets as related to capital cost of project. But here you are provided with 18 such categories and all as user defined. The default nomenclature given here are of industrial type, which you may adjust and adapt as may be required in a particular working. For example, working for a hotel project, you may put it as kitchen equipment, hotel interior, hotel air conditioning, hotel furniture and fixtures, etc. Same way, working for a hospital project, you may rename it as OT equipment, X-ray and MIRC equipment, and so on. It provides for capital WIP and as well for advance for capital goods. 3. Intangible assets category as PNP expenses, technical know-how fees, and developmental expenses. Further, you are provided with 3 investment categories and additionally 4 user-defined non-current assets categories. Provide for PNP expenses and contingencies with a detailed working there too. All these quite more suffice and you could effectively manage your cost of project. Then we have a look to the existing column for an existing unit. It is always preferable and advisable to put in actuals of last 3 years and then the relevant details of existing column of cost of project and means of finance will be called for and will get auto updated with no further input in existing column. It will also present here the available liquid surplus, available margin for working capital, that is current assets minus current liabilities minus existing bank borrowings. Now, referring to the proposed column of cost of project, state the amount of capital expenditure as under proposed column intended to be incurred for each of the respective capital assets of the project, with further breakup and change in nomenclature as to be more specific thereto. Total status as to cost of project is immediately getting updated with respect to existing cost of project, proposed cost of project, and total cost of project. Funding status of cost of project. You will find the option there too as 7th menu item under input parameters. The proposed cost of project as finalized will be shown here as under proposed column. You decide on to assets coverage for term loan for each of its type. For example, some banks do not prefer to fund land. Some as 60% funding to building premises and many at 75%. Machinery and equipment usually at 75%, whereas tools and fixtures at 60%, and whereas most bank fund 50% for molds and dies. Accordingly, as the case to case, you arrive at the term loan as per respective assets coverage. Same way, you could work out for capital subsidy, promoter contribution, subordinate debt, etc.
you are facilitated to work two-way for each of the item, either as percentage of funding or as amount of funding. This results in lot of convenience and simplicity. Thus, you ensure that your request of term loan is not exceeding its respective assets coverage.
Already incurred, to be incurred status of cost of project. You will find the option there too as 8th menu item under input parameters. If your proposed project is already somewhere during a different project implementation progress stage, then you could get the breakup as cost of project as already incurred, cost of project as yet to be incurred, with total proposed cost of project. This should show the more clarity on the cost of project. Calculation of PNP expenses and IDC. Within the main cost of project screen, calculate button by the side of it opens up a screen for detailed calculation of PNP expenses including IDC. It provides for a detailed calculation of PNP expenses under major 6 heads and with 41 subheads under it. All default nomenclature are user defined, and this itself is listing of all the possible items of PNP expenses, ensures that you could work out PNP expenses in detail and without skipping there to any major item. Major head for preliminary expenses as formation and incorporation expenses with 7 user defined sub items with appropriate and useful default nomenclature. Similarly, for establishment expenses, regulatory expenses, funds raising expenses, etc. You could even work out pre-operative expenses under different heads as trial run expenses with all incidental expenses there too. The last and third panel in the screen enables you to calculate interest during construction period under 3 term borrowing categories. It provides for 5 disbursal clauses for each, stating the amount of disbursement with stating of varying period of utilization till COD, interest rate, etc. It provides instant calculation of IDC as per each disbursal clause and a total IDC amount. Thus, this facilitates a lot for the detailed calculation of PNP expenses and IDC there itself within the main screen of cost of project. Calculation of provision for contingencies. Within the main cost of project screen, calculate button by the side of it opens up a screen for detailed calculation of provision for contingencies. It provides for a detailed calculation of provision for contingencies as for all project related assets, considering to what extent the said cost is firm and to what extent it is non-firm, which is subject to escalation and contingency thereto. Work out provision for contingencies as separately for each project related assets, either as percentage to non-firm cost or alternatively vice versa, stating the amount of contingency and getting known the percentage of contingency thereto. Thus, arriving and getting out of sight the consideration of provision for contingencies will never happen, and the same is getting worked out with lot of ease and convenience. Phased cost of project. If your project is not at one juncture, it is not getting commissioned at one time as once for all, but it is phased out over next few years, and while production and operational activity gets already comes into play and effect. Under such cases, you continue your projection working with respective and related production and output activity and with operational P&L account, and that all along with your further commissioning of project is in the progress during these operational years. You could phase out your project over next 5 years as conveniently for each of the item of cost of project as separately for each year over next 5 years. For example, there is no phasing for purchase of land and it is all purchased at one juncture only. Building is getting completed at 3 juncture, say construction period and second year, whereas the cost of machineries is separately phased out for each of the year as required. Very importantly, you could conveniently phase out even the margin money for working capital as well, bringing the respective margin as the production resumes and gather momentum in future phased years. You could even phase out your means of finance accordingly, even permitting different disbursal clauses over next 5 years as for each of the term loan defined under proposed column. Capitalization of cost of project items to fixed assets as that of capital WIP, contingencies and PNP expenses. Package provides very good options for it. All respective figures are simultaneously presented in the input screen for information and deciding on to capitalization. That it may be capitalized in terms of existing assets value, proposed assets value or total assets value, or you may opt for specific amount as to be capitalized to certain specified capital assets only. You may opt for as either to fully capitalize or fully write off, or as partly capitalize and partly write off, etc. You have seen how simpler and easier it is here. The complex and complicated part is that of capitalization and write-off. The so capitalized assets will be subject to depreciation charges as usual. As related to cost of project, detailing on depreciation workings. There are 16 user-defined depreciable categories as against normal usual need of 5-6 such categories. As related to method of depreciation, it is not overall, but you could be selective of method for each category separately. Say SLM for this category and WDV for next 3 categories and then again SLM. You could place your own rate of depreciation for each category. Importantly, you may specify the part consideration of depreciation over next 5 years for any of the category. Say 3-month depreciation on addition to machineries in 3rd year and so on. This part consideration would be of much relevance and great help in case of phase cost of project. Thus, a very simple and all accommodative input with varying nomenclature, differing method, differing rate and differing part year consideration. The same way, you could separately specify depreciation for IT purposes in this screen under tax on profits. Intangible assets write-off. Now, we have a look to all intangible assets like PNP expenses, technical know-how fees, developmental expenses, etc. You may opt to write off in percentage term to intangible assets value or as year specified amount, where simultaneously it indicates the max amount that could be written off. As for all the 3 above, it would be fully inbuilt and is set for the following calculations. A. Amount to be written off as for each year separately. B. Carry forward balance as to be carried over to balance sheet.